Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Hey everyone, today we're diving into a huge tax change that's creating a brand new benefit for millions of workers, but at the same time, it's a massive headache for businesses. So let's break down exactly what you need to know about the 2025 tip and overtime relief.
Simple question, right? If you answered yes, and it doesn't matter if you're the one paying or the one getting paid, a new law that kicks in for 2025 is about to shake things up. You're definitely going to want to stick around, because this is going to hit your wallet one way or another.
So this is all thanks to a new law called the One Big Beautiful Bill, or OBBB for short. And for the very first time, it's creating a pretty big new tax benefit. But as you'll see, what's a win for workers is turning into a real operational challenge for businesses.
All right, so let's get into the nitty-gritty. What exactly is this new deduction and how's it supposed to work? At its heart, the OBBB is changing something fundamental about how some of your earnings are taxed.
Okay, this is the core of it all. Starting with your 2025 taxes, if you earn what they call qualified tips or overtime, you might be able to deduct those earnings from your taxable income. In plain English, it means you can subtract that money from the income you pay taxes on. This could directly lower your tax bill, which means more money stays in your pocket. Pretty great, right?
But you knew there was a but, right? Here's the catch. To claim any tax deduction, you need to have the specific numbers to prove it. And that is exactly where this great new benefit creates a massive reporting nightmare for employers.
Just look at this difference. It's night and day. Before, employers just had to report your total pay. Simple enough. Now, with the OBBB, they have to track and report all of these things separately. The exact amount of cash tips, the specific job of the person who got the tips, and the precise amount of overtime. That's a huge jump in administrative work.
And let's be real, most businesses just aren't set up for this. Their payroll software, their accounting methods, they were never designed to track this level of detail. It was this huge, sudden change that nobody really had time to prepare for.
So the IRS saw this massive problem brewing, and they actually stepped in with a solution. They've essentially hit the pause button on the penalties, but just for 1 year.
This is the key thing to understand. The IRS has designated 2025 as a transition year. Think of it as a grace period. It's basically a dress rehearsal before these new reporting rules become mandatory and the real show starts.
And hey, don't just take my word for it. The IRS put it in black and white in Notice 2025-62. They're officially stating that they're treating 2025 as a transition period. They're basically admitting that, hey, businesses need some time to adapt to all this new complexity.
So why did they do this? Well, it all comes down to some really practical problems. The IRS realized that employers might not even have the info they need, that the payroll software isn't ready. And get this, the actual official 2025 W-2 forms won't even have the new boxes required for this level of detail. So it was kind of impossible from the start.
So what does this relief actually mean for businesses? It means for tax year 2025, and only 2025, the IRS isn't going to slap you with penalties if you fail to provide that separate breakdown of tips and overtime. But, and this is a big but, you still have to report the correct total pay. No getting around that. The break is only on the super detailed new stuff. Okay, so let's break this down. What does this all mean for you? Because it's a different story depending on whether you're signing the checks or cashing them.
All right, employers, listen up. For 2025, you're shielded from those nasty penalties for not having the detailed breakout. You're off the hook. However, the IRS is strongly encouraging you to try and give this information to your employees anyway. Why? Because they need it to claim their deduction. You could do this through your company's web portal, a separate letter, or even by using Box 14 on the W-2, just for overtime pay.
Now, for all you employees and payees out there, this part is for you. The deduction is still available to you for 2025. The benefit is live. But here's the deal. You need the numbers to claim it, and since your employer isn't required to put them on your W-2 this year, you've got to be proactive. You need to ask them for a separate statement with the specific amounts for your qualified tips and overtime. And just keep an eye out, because the IRS says more guidance is on the way about how to actually claim this on your tax return.
Now, I can't stress this enough. This relief is temporary. It is a 1-year 2025 only Band-Aid. That's it. It is not the new normal, so everyone needs to be getting ready for what comes next.
This timeline lays it out perfectly. 2025 is the transition year, the grace period, where you're safe from penalties. But starting with the 2026 tax year, it's game on.
This detailed reporting becomes mandatory, and those penalties for not complying, they'll be very, very real.
So if you're a business owner, a payer, a payroll manager, anyone who deals with this stuff, this is your wake-up call. You have 1 year to get your house in order. Use 2025 to update your software, adjust your accounting practices, and get everything ready for full compliance in 2026.
And that really is the million-dollar question every business needs to be asking right now, isn't it? The clock is ticking. This 2025 relief is a helpful runway, for sure, but 2026 is when the plane has to take off, ready or not. The time to prepare is now.